Hello everyone, welcome to DMV Innovative Investment Live. The recap of this stream will be available in the DMVII Live Recap playlist. Keep in mind, stocks and strategies discussed here are for information only. Do not treat any information provided here as investment advice or recommendation. It is up to the individual investor to perform the due diligence prior to investing in any company. And here is the live stream from this week's meetup session.
Okay, Wei, you want to kick it off there from the...
Yep, so this week we noticed a huge expansion in volatility due to the North Korea tension, and also especially for Google, they have this a new issue with the firing of James Moore, the software engineer that basically released a 10-page memo that talked about gender diversification and how to address that issue, and somehow it sparked out a lot of debate. And so there's a huge volatility building out in Google on top of North Korea. So for me this week, I actually sold in the money puts for Google with the at a strike of 950. So if it stays below 950 by the end of the month, I will be a proud owner of 100 shares of Google. So
where did you sell it at?
950 in the money.
Yeah,
950?
so there's no yield. I didn't realize Google does not pay a dividend.
Yeah, so there's a huge volatility right there as well. So the contract was selling something close to like $30-something per contract, I think. And so that means that my break even is somewhere close to like 920.
What date? What strike date?
30-something days, almost a month.
September 15th?
Yeah. Yep, so that's what I did for this weekend. Do you guys have any thoughts on what's going to happen with this North Korea issue? In my personal opinion, is nothing's going to happen. It's just both sides, US and then North Korea flexing muscle, and maybe they'll get some negotiating power by threatening some more.
Well, the one statement that ran with me this weekend was the North Korean regime is homicidal, but not suicidal. I mean, they kill their own, but not themselves. So they're not about to stir the fry.
I mean, I think one positive on here is that Trump, President Trump did make that threat. Well, if they threaten one more time, I'm going to really let them have it.
Yeah, right.
So they successfully made that threat and nothing happened. So that may have made them feel a little bit better, say, hey, we can stick it in their eye and nothing happens.
I wouldn't give them that much credit. I mean, that's been the policy throughout, and it'll work either way, whether he plays a madman or not. They know they're in trouble. They know full well what the U.S. can do.
Yeah.
Whether we stoke the fire or not.
Yeah, but the only counter to that is that they are very well aware of what happened to Muammar Gaddafi. Now, whatever you think, they don't want that to happen to themselves.
Yeah, that's why they won't give away the nuclear weapons. But there's
they'd rather go out with that button pushed than they would Gaddafi's way.
But let's go to the point of volatility. Yeah, that was the spark for the volatility more than any fundamental economic reason.
Yep, and if you just look at VIX, right, the VIX expanded from like $9, like 80 something, all the way up to like $17.
40%.
Yeah.
The market was due for a pullback, though. We're way over.
Yeah, way overdue.
Overdue, and so any little thing would have caused this dip in the market.
Yeah.
I don't think it'll go down very far.
Well, you're talking from experience on that.
There was a report. I'm sorry, there was a report that came out from Bestbook Investment Group that said that August, on average, has had a 1.39% decrease, and that September has over the last 100 years has been the worst performing month.
That's correct.
So I say if you're in cash, you're probably in a good position to start looking for good value out there, and then put it to work in the coming month or in the next.
Yeah, this is true.
Okay, is that it for you, Wade?
Yep.
Next, I always want to say I'm happy to have ladies come here because I'm thrilled by it. I think that's. Women. Again, commercial arts. Women in general are better investors than men.
So are you saying you're not happy to
Now,
see
wait
me?
a minute.
Sorry to divert this. I'm glad to have you here to, again, offer your insights or observations.
And just FYI, you guys are being streamed online, so there are people outside listening. And if you guys don't want to be streamed and all have this posted after, I can crop you out because it will also be posted on our YouTube channel.
I won't mention all my inside information.
Yeah, don't worry.
Okay, so we're back to you.
Stay anonymous. You'll be okay.
Well, I think that the chance, I didn't really research. I'm here more to learn and catch up. I used to be quite a person with the stocks, and then 25 years went by and I didn't do anything, so now I'm really getting back into it. And I've got to refresh my memory with all these things, but I think there's a very little chance that we will go to war, but there's probably more chance under this president than ever, because I think, Trump... there's a new sheriff in town. I think he would love to flex his muscle with, and because of that, I think the market would not react well if there, on the outside chance that we did go to war. I think if they do those ICBMs around Guam, I think they set their own fate, and it's not going to be good. And I also agree that, Kim Jong-un, when he goes down, he knows they're going to get him. He's going to take everybody he can with him. He's going to press the nuke button. I'd believe it in a minute. So I am leery about, just the tensions we have right now, and I do think the market would probably go down because the whole world would be in such an area of unstable. We're going to be very unstable at that point. We don't know if China is going to even, allow the U.S. to do that. Who's going to intercept? What's going to happen? But my mother's telling me, where she gets her information, I don't know, that we have technology that can intercept intercontinental ballistic missiles. And I tell her it's wishful thinking. I don't know if that's true.
We do.
We have the Iron Dome in Israel that proves that.
Yeah, and they also have the Aegis anti-air missile defense.
And you think they're pretty accurate? We're hoping.
I would like to think they are.
Yeah.
The
So.
problem would be what the payload of nuclear material would.
And then there's also debate whether or not North Korea even can perform that kind of feat to launch anything across its border.
Yeah, but when they want to act like they don't know if Iran actually launched the satellite or not, well, how are you watching for ICBM launches if you can't even tell if Iran launched the satellite?
Well,
So somebody's falling down on the job big time.
So the thing is that you do have satellite view that you can view, and then there are also a lot of the cruisers surveying the area, and yeah, you should be able to detect
Well, I'm just
it,
saying there would
especially
be no
if you
doubt
have
if
the.
Iran launched the satellite or
Yeah.
not if you were watching out for ICBM. So,
Yeah, I mean, this is the thing though.
stories
If
don't
you
match.
don't pay attention to it, then you can go under the radar. But if you actually deploy resources, you have higher probability of detecting it. That's just
Is that it for you?
That's it for me. Thank you.
Rick, you're next.
I did 2 trades this week, and although they were both profitable for me, I'm not too happy about the way that I did them or the motivation, because they were both based on, to a large extent, on emotion, and I think most people here would agree that as far as is possible, you should try to keep your emotions out of decisions over financial financial. Trying to think of a synonym for trading, like trying to think.
You might
Sorry.
want to cut that out
Choices.
from the recording.
That's why you got to have your mad money so you can kind of just take those high risk every once in a while when you see one.
Okay, so briefly what I did was I bought the ETF for gold miners, GDX.
Okay.
I figured with all this talk of wars and rumors of wars and everything,
That has a
gold
little
would be
deal, huh?
going up.
When did you buy it? Last week or
last week.
I mean,
yes.
early last week. because-
Early last week.
That was a good price.
It went up from there. And I sold it on almost an impulse because in 3 days I had a neat little profit. And I don't think that's the way you should handle things like that. I mean, if you have a reason for buying something and nothing substantial changes in the picture, you should hold on to it. And in fact, I would have made more money if I had. Okay. The other one was I sold Stag, S-T-A-G, which is a REIT that owns storage facilities. And that was, that,
Is it back?
I mean, I had a profit. I had a nice
GAG or
profit on that.
BAG?
STAG.
S-T-A-G.
SPAG.
No, T, it's Susan Tom.
It was
It's
one
up there,
day
Gary.
when there
Barry
was,
Smith's got it.
Sierra Tango Alpha Golf.
Oh, it's Stag. Oh, okay, Stag.
there were red numbers all up and down the screen except for that. That was up. And so I gave myself, I don't know, it was like giving myself, I'm a kid,
Now,
and
that's
giving
hefty
myself a
yield,
lollipop.
5.2% yield. That's pretty hefty.
I think it is a good thing to own. And
Where did you
So-
buy it, Rick?
where did I buy it?
Yeah, what
What
price
price
did you
point?
buy it? Or when?
I don't know, but it was lower by several points.
Huh?
It seems to be tracking the S&P, doesn't it? I mean, it took a low in November, the election, prices went up with the S&P and, yeah, pretty much,
So I'll just say that although it worked out okay, I think I let my, maybe, I guess it was fear or something, might get away with me.
Yes.
And say, okay, I've got a chance to make a profit here. I want to grab it.
I mean, that's what we want to know is what do you think? I mean, it's not right or wrong, it's just what do you think? That's what we want to know.
Well, I think I shouldn't have done that.
well,
Actually,
to make you feel a little
moving
better.
averages and stuff, a lot of times if a stock moves up, kind of gaps up, well, then they're gonna bring it back to those moving averages. So if you go ahead and take your profit, then when it comes back to the moving average, then get back
That
in.
is-
If you,
that is
and you've
very
got
possible.
that intervening time to research, make sure if you want to be a long-term investor.
But talking maybe in the back of your mind is the psychological seasonality that the gentleman back there said that August, late August, September, you get a downdraft, so you're finding out cash. So save it up for October. It's not a bad thing. Nobody ever got hurt by taking a profit, right?
I think most of the people now are on the holding phase because a lot of people have invested very early on and now they feel like it's overpriced, so then they still have to believe in the company. So that's why I think we have like small plays here and there. Like for me, I'm more shifting to volatility plays. If I see some expansion volatility, I want to capture that. That's pretty much it. Like fundamental wise, there really isn't much going on.
And so is that it for you then, Rick?
Yes.
Next, the gentleman with the beard there.
What's the question? I walked in a little bit late, so
Okay. So,
What's the meaning of that?
all right, the,
Okay, yeah, my fault. You just start off by saying what you did this week or last week or what you plan to do in the future and your investment philosophy or any wisdom that you want to share with the group.
gotcha.
or just pass, whatever you want.
Or just pass.
Because it's, on video.
You got a big field.
Or indeed, none of the above.
Got a lot of options right now. I did not do much of anything last week. I was kind of paying attention to the volatility and trying to keep an eye out for opportunities. And I've come more from the deep value investing world, so that's kind of the philosophy that I bring. And so just trying to keep an eye out for how the volatility might have created opportunities in that space. So still doing more research.
And we want to hear what everybody's thinking, so that's great to know that's what you're thinking. So that's it for you then?
That's it.
The lady next to you.
Hi, I'm actually kind of like her. I want to get into investing. I was invited by Dan, and I'm a commercial realtor and I'm doing some commercial investing. So I'm just really here to learn a lot about investing.
All right. I mean, we love those people. Everybody, we got a mix of people, and that's what we want. So everybody just, but what we want to know is what they think, and that's great. Okay, the next gentleman next to you.
Delbert. I was kind of looking at the forestry industry a little bit. I know a lot of y'all are into the tech stocks and stuff, but they always have like all the surprise news announcements by the other companies and things. So if you're looking for something a little slower pace and like to play options, you might look into the forestry industry. The stocks tend to be a lot more flat over the whole year, and they'll pay you about a 3% dividend. And so that'll help complement what you're getting from your option trading.
Which
It's a
industry?
little slower pace to give you
Forest?
if you're not up to speed really on doing that yet.
Is that forest? Forest?
Yeah, the forest.
Any names? Any stock names?
Well, there's CTT, POPE,
Slowly so you can.
WI.
What's
Well,
the first
pull up RYN.
RYN?
Yeah,
Robert?
that's one of the smallest ones right now. Its PE is showing real low because it beat the earnings
I've never
estimate.
heard that one before.
And so now it's trying to come back down
Oh,
after
yeah,
having
yeah.
that surprise earnings report.
What?
So if you have some time to
So that
try to
has a
watch.
3.5% yield.
Yeah. But they just had a surprise earnings report the last quarter, so the price is high and the PE's down, looking low. And then, are they gonna keep surprising that big, or is it just kind of a one-time shot? But they've done it before. But there's only a small number of players, but some of them are really huge, and like this one's a real small one. So are they just gonna get squished, or will they be a buyout target, that kind of stuff? And, you're less likely to just have a sudden collapse in your stock price. They just tend to kind of stay even throughout the year. So to give you a little stability while you're trying to learn to play your stock options on it, and then you get that 3% to give you a little bit extra boost.
Fair enough.
You got a whole range of companies from big to small, extremely high PEs to low PEs. So you have a smaller, instead of looking at the entire market, you might just look in this one area, and you got a kind of a mix of all your different, properties of company you might be looking for.
So is that it for you?
Yeah.
Don, you're next.
The Friday activity kind of got to me. I mean, the market went up, but the number of lows was awfully high, which indicates there's just a small number of stocks driving the market again. I do feel that we're going to have a pullback of some amount if we're going to have a large number of lows when we have a positive market. I bought some Papa Foxtrot.
Okay. That's the military lingo for those who haven't heard Don. He's preemptive.
It's convertibles, right?
Okay, so that one had, now that's for Richard, that's over 6% yield.
Yeah.
And I bought some
You sell goods
Papa
against it. That's right.
Hotel Bravo.
Okay, it's another one I heard, yeah. So that one has only a 4.4% yield, but that's also an ETF.
By the way, the PFF that I just mentioned, that gives you a monthly, is that correct?
So is this.
Yeah, it pays out monthly.
That's it for me.
You pick a particular day of the month that you buy it then? You pick it
Yeah.
right after the dividend or before? Because obviously the price drops by the amount of the dividend. Just don't pay attention to it.
No, I just happened to have some cash.
Yeah.
Wanted to put it to work.
Yeah, a couple of fundamental comments. What's that?
I need lights above the wall.
A couple of comments on the
Yeah, future.
fundamentals going on when we talk about the market. Reached about 10 different days we had new highs, but they were very small increments. And there's an internal rotation of a lot of stocks. I think a very significant percentage of the S&P 500, I don't know what the number is, but it's a majority, are in correction territory. Believe it or not, even as the market is creeping new highs, there is an internal correction. So when we talk about the market's going to correct, well, many stocks already have corrected. So if you do see a drop in the S&P or Dow for 3-5%, that is on top of an already manifested correction. So that means that any dip would be somewhat minor, I would think, 3%, 4%. All other things being equal, there are no exogenous events like North Korean conflagration. But we have that concentration of Facebook, Amazon, Netflix, and Google that are owned by a majority of players around. And when those go down, obviously it brings all the averages down kind of disproportionately. But then again, as you said, a lot of stocks have been correcting, ready for buying opportunities. So this week, or last week actually, it was a week ago Friday, I was on the road and my wife was driving and I decided to sell some nugget. And I as in normal, U as in universal, G as in goat, T as in tango. And that's not for the faint of heart. This is the 3 times directional gold miners with the GDX version. 3 times.
GDX.
So that when GDX goes up 1%, this goes up 3%. When GDX goes down 1%, this goes down 3%. But as you can see, the cyclicality of that chart there, up and down, up and down. There's some rhythm to it. I'd like to sell puts around the low 30s, no higher than that, and usually rewards me quite well. And it was a good time to buy because in Friday this is when the story started to come out. So the other hedge that I did was, and I call this a hedge because there's trouble abroad, gold usually goes up. The other hedge is the Russell 2000 RUT, R as in Riga, U universal, T as in 10. I think it's a carrot with RUT.
Your uncle
I'm not sure if you'll get it like that, or is it put a carrot in front of it? Up arrow.
I don't think Vince can bring the future.
So that resembles or reflects the IWM, which is a Russell 2000 ETF. And I sold some calls. I like to sell premium, that's my strategy. By selling a spread, call spread. I believe I sold something like the 145s or something like that and bought above that to cap any upside risk. And I bought it when the IWM was about 142. So that's been precipitous going down. Looks like it'll reach maybe touch that 135 support and then turn out. Yeah, that's right. It's essentially that chart. So I sold at 142 the calls, and I think it was a September strike, so I'll keep that. That's one of the things about your strategy about the GDX, for instance. I'm more comfortable selling the put and let that erode in value. That way, if GDX stays level or goes lower than I bought it for just a little bit, I still cash all the sold premium. So I don't make as much money as if it went up 10-20%, mind you, but it has over time worked out to a good return above 10% if you can keep it up. Yeah, there is the black swan that will wipe out those returns, but that's another story. That's what you want to look out for.
By the way, there are black swans in Australia, so they do exist.
What you do. Another name for you is Alpha X-ray P as in Paul. American Express. I listened to Kramer, Jim, Mad Money guy, Jim Kramer, and he was comparing charts.
5% yield.
He was comparing charts of AXP, MasterCard, Visa, and they've been down touching their 50-day moving average, a buying opportunity apparently he calls it. And it was kind of a buying opportunity. As you can see, it's dipping down. I sold some puts on that I believe Thursday. And we'll see what happens. People are spending more. They're going out and they're using their cars more and more. So those three are bullish. The last one I mentioned is one that we've talked about a lot is Micron. Emma's in mom and you as in your these have gotten hit. Some of us have participated in MU and AMD.
See, now no yield on it.
They got hit along with the QQQ, and I sold some puts here, and I sold them perhaps on 30, I think, 30.29. So I'm waiting it out for a turnaround. Micron, very good company. Does a little bit out of favor for now, but I wanted to add to that position. I think what Tom actually suggested one time, he's not here, that I bought a January 18 call, and I'm continuing to sell weekly calls. So I believe I bought a 32, and I've sold a 28.5, 29.5, 30.
Just for our people.
And each week I'm collecting.
That is called a calendar spread.
Yeah.
It's more a diagonal. It's different strike. It's a diagonal strike.
Different strike, and there's another dimension that is diagonal as well.
So the rationale here is, when you get into options, is that the premium is much richer in the near strikes. That is, this week, next week, the following week, within a month, is the rich premiums. Far out to January, the premiums decrease, the volatility decreases toward the out months. And you can see, if you compare the charts, the amount of premium that'll give you, let's say, 10 cents premium for next week, 10 cents premium for next week. If you multiply that by, let's say, 26 weeks, which would be January or so, you would expect 10 cents times 26, or $2.60. No, you don't get $2. You get more like $1.80. You pay much less premium. So the strategy would be to buy the way out calls for reduction of premium, and then sell the rich premiums in the near term. So that's about it. I defer the rest.
Question.
Yeah.
So you're selling a lot of put options. So what happens when you actually get them below the strike? You actually own the shares, or you just
You had the Google example. I'm the proud owner of said, or I roll them out, depending how you want to do it.
Okay.
I did that with Under Armour. I sold some puts, and then I got put on that.
You got hit pretty hard.
That's right, and also Apache, and believe it or not, I still own Apache, which is got hurt, but I keep selling calls against it, and it's an interesting phenomenon that you can be put a stock and have on paper have paid more than you that are going to sell it for, but as you write calls against it, you're more than making up for that loss. More than making up for that loss, especially with very volatile stocks like APM and Under Armour.
So you do eventually own them.
On occasion, right? Especially when I'm not paying attention, because I have a lot of positions.
Yeah.
I'd rather not get
expiring the money.
So what I do is it costs me $15 to get a sign. So I do the math. If I have several 100 shares of that might not be as economically advantageous
Well,
to.
that's another term, a sign, if you do option writing, either calls or puts, the potential being assigned, you might want to Google that, that'll be where the contract is completed, if it gets assigned.
Yeah.
So,
And you do incur a fee, $15 for the assignment, rather than, let's say, 100 shares will normally cost me $5 because I discounted rate. But here I'm paying $15 instead.
Okay, is that it for you, Hector?
I defer the.
What was your long strike that you were selling calls against something?
I believe it was above the money, out of the money actually, right? It was like 32, I believe, 31, 32. And then I'm selling the 30s against it. The reason is the 32 would be cheaper. And by January, the strategy would be that you would expect it to be above 32. Today is we're August. By January, you would think it would be above 32.
That's all we know, that's what you think, that's all we want to know.
Yeah, and you
Right
pay
or
a
wrong,
cheaper
we don't
price
know,
for a
but we
32.
know that's
You
what
pay,
you
you
think.
pay more if you buy a 28 or a 30.
Alright, so that's it for you, Hector?
I have a quick question. So does it not make sense then to get assigned stocks? Because a transaction cost is usually $4 or $5 now.
Well, no, because as I said before, it cost me $4, $3.99 to sell or buy 1,000 shares, whatever the shares. But instead, I'm now being assigned and paying $15 instead of $4.
So it's really not.
So I could roll it over and not be assigned.
So that's not a good strategy to use if you want to take ownership of a particular stock.
Now, here's the other deal that might be more advantageous to take that $15 hit. Is the bid and ask prices. If you have a not totally liquid option, and if you want to roll over, let's say comes Friday and you are in the money, you're going to be assigned, and you okay, I don't want to be assigned, I want to roll over. There's a difference between the bid and ask price. So I have to buy it back at the ask price, and then sell at the bid price, and I'm losing a couple of bucks here and there.
But by the way, I do want to interject in here, this might be a driving factor about option trading, trying to avoid the cost of the signing. And what wouldn't necessarily make sense, might make sense that there are people like Hector that want to avoid the cost of assignment. So it could drive a weird price. It's cheaper for Hector, to get out of it by buying it, even though to avoid that assignment cost.
If you have a lot of contracts, for instance, 20 contracts, you're paying, some people paying dollars per contract, that gets into. But a small amount, then I might be able to get
I
assigned.
haven't done the math, but I often have a price that I want to buy a particular stock at, and so I often wonder if I want to, I don't know, write an option or what it is, and then get assigned the stock. But if I'm gonna incur a $15 fee for the assignment, then it almost sounds like it doesn't make much sense.
And also caveat too, I think that's TD Ameritrade, is that what you?
Right.
They, apparently, TD Ameritrade has the $15 assignment charge. That is not a industry-wide policy.
So here's
Just
another
take
thing.
Right,
That
sure.
if you're selling a contract and the contract is giving you at least $15, then if it goes below that strike, you own the share at that strike, but then you already collected more than $15. So technically, you are getting that assignment for free.
Yeah.
Is it $15 per stock or per block?
Block
Per
assignment.
assignment, yeah.
Okay, so that's it for
But
you.
Carrie's right, there's a Tasty Works, which is another brokerage, is only $5, I believe.
So that's it for you. Steve, you're next.
Can you trade Walt Disney?
Disney, yes. Disney, D-I-S. D as in dog, I as in indigo, and S as in Sam.
Okay, Walt Disney.
Wow, look at
Oh,
that guy.
I guess, let me see here, and you can also look at that volume spike on the gap. So I think that's normal to have a high volume move. If there's a gap, there should be a high volume, in fact, there was there, so that's understandable. But there's probably some sort of reason for that.
Well, in the news it said they're gonna stop providing content to Netflix.
So that's the Walt Disney movie, Pixar, is it 2019? And they're gonna start providing their own streaming distribution.
So it's called Watch. So they plan to distribute this thing kind of like Netflix, but it's called Disney Watch. And then they will do all the Lucasfilm, Disney content, and
By the way, it has a 1.5% yield here too. So we know something, and that's better than, poke in the eyes, I don't like to say.
yeah. So overall, I think it's actually better to just buy some put options in Netflix than trying to bet on the upside of Disney, just because a lot of people are trying to get into the streaming service. So I think the competition is
Buy put options or sell?
buying put options on Netflix. Because if you look at the price to earning ratio, it's like 200 something. It's more overvalued than Amazon. So that puts you in some perspective. Whereas Amazon, they have all this cloud service and they're doing something very, in my opinion, good things, engineering. Whereas Netflix just, okay, it's just streaming. Okay, they get increase in subscription overseas, but it doesn't mean a lot of the overseas content providers won't put out any fight. So I think instead of going long, you might actually be better to hedge on or going short on Netflix.
What's Netflix?
That's NFLX.
Yeah.
They were not impacted as much as.
They didn't go up
Yeah.
anyway. News.
The
No deal for
you know,
info.
the narrative on Disney is that yeah, sure, they'll have this streaming service, but it will take a bit to ramp it up. There is a lot of uncertainty how successful it'll be. So you're really shooting the dice, with Disney. It's going to be 2019, I believe, not right away. In the meantime, Netflix will continue to run Disney. So it's quite uncertain what's going to happen with Disney. At this point, their theme parks are doing quite well, movies are doing well, but it's another place we're going to have to spend a lot of money.
So is that it for you, Steve?
Other than the, I heard if the market was pricing in a major conflict, like a war, it would go down 10 to 15%. So the Raymond James advisor said that's about what.
That means the market doesn't believe that that's going to happen.
Yeah,
right?
just 1% or 1%, not major price.
You got to buy Raytheon stock though.
I mean, I think you gotta cut, there's one thing. One, the market doesn't believe it will happen. Two, the market does believe it happened and reacts. Or three, it actually happens. Then what? Then, watch out. But we're not, the second two, we're not on slide right now. So, is that it then for you, Steve? Okay. Vince, I think, I missed you last week. Do you want to chime in on my idea, or sort of getting you right in the middle? But a lot of people like your expertise. And
This VSH has got a high growth rate, predicted high growth rate for the future. It's got no debt, and I like to buy a stock in a dip that's in an uptrend. I buy it in a dip, so I bought this, and I think it's going to probably go down a little lower. The market is not done dropping yet, I don't think. My idea about the market is we're not going to have a big war. The market's pulling back because it's gone up so far, so fast, and it's due for a pullback. And so that's happening. And it wouldn't have taken anything to cause it to happen. This is just a reason to cause the pullback to start. And I think it's probably got a few more days of pullback. And I probably shouldn't have bought this at this point, but I'll hold it for a while. And that's it. That's all I did.
Okay.
Some calls against it, it should be fine.
Not a bad idea.
Okay, then, Sahi? And by the way, thanks for being a gentleman there on lifting the cord there. That was very nice.
not changed any of my positions. I'm a little surprised about NVIDIA stock after the earnings call. The stock was, growth stock. It has given a solid earnings, 125% of the earnings per share.
NVIDIA. NVDA.
NVDA.
Got it. Yeah, what happened? So, yeah.
Yeah.
The interesting thing, though, is that the people would say that if NVDA goes down, it drags a lot of others with it.
Correct.
And I don't thought that it really happened. Like the Facebook and the Amazon.
Yeah.
But maybe the other.
Correct. So this is a cheap technology stock. The earnings were so great, the solid earnings which surpassed all the expectations or estimates by the Wall Street guys. But still, the stock is down almost like maybe I think 6%. The stock is down. So I just want to know any comments why, people say that
Jim Cramer's just taking on it in the
Oh,
news.
so it has a little yield too, I didn't even know that.
Jim Cramer was talking about it in the news coming up.
oh, he's talking.
What did he say about it?
Yes, Jim Cramer.
What did he say about it?
Well, I don't know, it's just seen.
Well, he named his dog
Like
NVIDIA,
Danny.
right? He named his dog NVIDIA, you know that, right?
I just saw the headline.
Yeah.
So he likes.
A lot of people say
traditionally they want to come back and fill those gaps. So you have one at $100 and you have another one down there at 70. So it's very dangerous to be owning that stock way up there above 100.
No, actually,
It's a long-term play, though.
Yeah, that's where the earnings call, the stock jumped on the earnings. So same like last quarter, this quarter also stock gave the solid earnings and also projected earnings also great. So the stock came down for no reason. That's what I
So here's what I would say is that most of the pricing is based off some future earning estimates and then multiply some multiples. Like for a lot of the semiconductor sector, that we're looking at something close to about $16 per every $1 of earning, and I think it's because their earning estimate did not match the current expectation. Therefore, by multiplying the multiple, it actually brought down the price of the stock. It doesn't mean the company is no longer good. It just means the valuation was a little bit overestimated by a lot of the essentially value investors or Wall Street people, whatever.
Okay, gentleman next to you. James, you're next.
Yeah, two I'm watching that I ruled out in the past, but have come back on my radar screen are Pets Meds, which is Pets, P-E-T-S. This is a stock that flared up in the 90s, but this is the mail order. Is that right? P-E-T-S.
No, P-E-T-S.
Yeah.
Yeah.
Yeah, what do you do that?
That would be a negative Vince chart, I know Vince would not like that.
But this one it's just shot up recently, but I also think it's a long-term play because people are
1.7% yield, is that right? Got
That's right, yeah. And it's the PE ratio is a little high, but I would say long-term play, it's a solid choice because people are always going to indulge their pets, and this is mail order and internet ordering. So I see a strong future in this. I haven't bought it yet. I'm waiting for a dip. And then the other one is Weight Watchers, which surprised me.
Wow.
WTW. I was really blown away by this recent activity. And America's ongoing weight battle. This will be a long-term growth, I think, as well.
Yeah.
So those are the two new ones on my radar screen.
WTW, okay, that's certainly is taking a jump there. Wow.
Yeah. So this one I'm less likely to invest in. I'm more interested in pets, but I just thought I'd throw them out there and see if people have any thoughts on it.
Why do you think it jumped up right there?
This recent one, what was it?
Their earnings announcement.
Earnings have been coming out this week.
Yeah, the one before that, February of last year, that was, I think, when Oprah started talking about endorsing the Weight Watcher as the program for, I guess,
And we've seen Oprah bumps before, but I think this is more based on earnings.
Yeah. I'm talking about the one February of last year. That one was where basically everything started going up since then.
Yeah.
Deals or looking to buy?
I'm looking more at pets, but I'm keeping an eye on this one too. So I just want to throw them out there since they were kind of old names that flared up in the last week or so in a down market. And that's all I have.
The lady next to you, huh?
I'll stay there later. Okay. Anything?
Yeah, the next gentleman there,
I haven't really bought any
the
new.
expert.
I haven't really bought any new stocks. The only thing I've done is buy some cryptocurrency. Last month.
Which one?
Ethereum.
Oh yeah.
Oh.
Yeah. So that.
Ethereum.
Yeah.
Theory. Oh, okay. Yeah, a big article there in the Wall Street Journal today. I don't know if you saw that or not.
What made you choose that over Bitcoin?
Just someone told me to buy it.
Simple enough.
There you go.
Well, I mean, apparently there was a big party up in New York that the Wall Street Journal covered. Yeah.
So.
Cyber cryptocurrency stuff and all that.
Yeah, I just bought a little just to kind of test the waters. But right now I'm kind of stuck because I don't know if I should sell it or should I keep holding it, and how does it work?
Careful. Is Noel here?
Spend it.
Yeah.
No, Noel's not here.
That's-
You would answer that.
I'd say it was a new thing, that's for sure. All right, so that's it then for you?
That's it.
Michael, you're
Without Noel being here, talking about Bitcoin and stuff, yeah.
Well, let me throw one thing out there. Is I think that Ethereum and the whole market of new cryptocurrencies coming out undermines my trust in this, because there's always going to be yet another new one. So why speculate on something that can be displaced by something new?
Yeah.
And I think that Ethereum and I've heard of 3 others. So I'm losing confidence that this will take root if there's so many of them.
Yeah, I just don't understand how they create new coins. Like Bitcoin has this whole mining thing. How do you, where is the bottom on that, right? If we create more dollars, we create inflation, but there's nothing
Well,
like that.
just the electricity cost and the complexity of computers.
Yeah.
I mean, so you need more complex computers.
So that's
There's
all.
neural networks.
In order to win with Bitcoin, you just need a faster computer. Is that what you're
And
saying?
cheap and free electricity if you have a power plant, right?
If you're mining, but
live
that's
on
different
top
if
of
you're
a-
investing in it.
If you live on top of a hydro plant or something.
Obviously, there's a lot of interest in that. My interest in Bitcoin and Ethereum, talk about, is not money or markets, but I'm interested in terms of technology and its functionality. A good thing you talk about it. I've been interested in Ethereum, not to make money, buy, sell, or anything, but its functionality. It's very powerful, and in this week's there was a lot of talk, and I read that paper that you're talking about. It will do things that are just not possible to do with credit cards or Bitcoins or agents or anything like that. One example that somebody gave, and I will be personally very interested in it, several properties that I have and the way I manage them, Ethereum allows you to do conditional. For example, you put somebody in your room or at a property where you are not for the night, either Airbnb or something like that. Credit card transactions are quite high. Airbnb transactions are quite high. With Ethereum and stuff, you can not only, with the help of the technology, make it conditional that you will refund their deposit if my camera tells me this isn't that and they have successfully logged out.
So like an escrow?
No, it's conditional payment both ways. Conditional payment both ways. For example, if I let somebody in through an electronic lock into the property for a night, next morning I will change the lock of combination of the lock and look at the property, and then they get the refund. A lot of these things are possible. So as a concept, not for trading mechanism for me, but as a concept, whether it's this or something else, the time has come where global transactions, transfer of value so-called, can be made based on not just one condition, but if then else, many levels of strings of conditional.
Yeah, it's an
Things
algorithm.
you put them in there that can be driven by an algorithm, because business is actually global now. A friend of mine actually has places in Europe here and there, and that they rent them by the hour and so on. I just have to
take a shower.
And these people don't want to know. They don't even want to know what the their credit cards or anything. They don't want to be identified as such. But anyways, my interest is technology. I'm fascinated by the new ways that transfer value internationally can occur. So that's about those Bitcoins and stuff. In terms of stocks, what Rick did and felt bad about, GDX, I did that same thing with GLD this week. But I don't feel bad. I just took my couple of dollars and I was happy. So GLD is also, just like GDX, correlates to gold craziness.
Up there, that's
So it's one of those things that you sell it, you say, oh my God, I shouldn't have. But so that's what I did with it. And it's just one of those things where if the Korea thing goes anywhere, either way, one way or the other, this will react to it. And that was the only reason I bought it. Otherwise, I had no interest in gold. One of the things that I'm just looking at is WPG. Just thinking about it, somebody who's income oriented, focused on this, those kinds of products like Don would be and others who have talked about these products. It's low, and that's where the opportunity is. Some analysts, some firms have,
11.45% yield.
Just on that, there have been some talk recently that they have enough cash on hand to sustain this thing, and also it's not a bad company, but bad things have happened. So something that I'm looking at, I may go into that in the coming weeks. Depending on how it reacts.
Are they a REIT?
Yeah.
Okay. Basically.
Okay, I'm done.
All right, gentleman next to you there.
I have a quick question for you.
Yeah.
The Ethereum. What do you think will happen when the government starts regulating those?
I do not know if government can regulate or not. Okay, the example of that would be there are many things that people will do regardless of what governments want or not want. Gold was one of those things where, for example, it doesn't matter what two people want, or what two governments want, or what the regulations are. People bought gold as a hedge. This is something peer-to-peer. Somebody with a cell phone in Romania and somebody with a cell phone in Phoenix can actually, through an exchange of some sort, can actually transfer value. So I don't think there will ever be, I shouldn't say ever be, not likely that any government can effectively control this. That's the beauty of it.
But if you're if you want to play poker online or bet online, you can do it, right?
But
so
if you and I want to do
to
that,
some extent, does have some control over it.
that's very true. But if you and I want to play, and he provides the technology, government cannot do anything about it.
Is there tax evasion issues though?
There are.
Definitely.
There are. They often talk about the drugs and the mafias and all that kind of
Your
stuff.
example with the by the hour rooms.
Yeah. So what do you do about it? I mean, it is something that will always be there in some shape or form.
Sure.
I do not know which one. But conditional and algorithmic based transfer of value among people of the world is something that will happen.
Some more? Is it?
Uh,
You have anything more?
yeah, I just wanted to ask everyone's opinion on this. I was looking at Netflix. So,
Netflix again?
Yeah.
Yeah, that was, like who was saying to, Wade, I think you were saying, buy puts on that for the Disney thing.
So, apart from all the competition in the streaming and the content providers like pulling their content, I was just looking at like the balance sheets on Yahoo Finance. It says that the total cash is 2.1 billion and total debt is 4.8 billion. What does that mean? Is that bad? Because I compared to some other companies and the ratio wasn't this much debt to cash on hand.
It's horrible. It's horrible. There are people who think Netflix is worth $35 or $60. So there's a lot of market hype in Netflix. As a company, it could be very successful. I own all FANG except for Amazon, I trade them through options. I always have a straddle on all of these, while having no faith that these companies can sustain the price that they have right now. Their number, Netflix is among the worst in terms of numbers, fundamentals. They have this many customers and they're going all over the world and everybody's watching Netflix all the time. Those things are true. But if you just look at the numbers, the fundamental numbers that you see one, that among many other things, Netflix has horrible fundamentals, but the momentum is there.
It's a trend in technology to have horrible fundamentals, but
And horrible fundamentals are good price value.
Yeah,
That's
basically,
what
if
it's
you look
at.
at all the startup companies in Silicon Valley, they're all like that.
Yeah.
So here's the thing, though. It just means
But
that
it would be the quick ratio that you want to pay attention to.
Yeah.
How much can they take care of their current debt?
Yep.
Because right now you have current debt plus long-term debt
Yeah.
as what you're.
So they're also like conditional debts too, because let's say tomorrow this financial crisis, and some debtors say, oh, we need our money back, and then can you fulfill this kind of obligation? If you can't, then you're in trouble. You have to somehow figure out a way.
It's sign of times. Tesla issued a bond at 5.5, and Moody says it should be considered a junk bond. If you're going to buy a junk bond, you buy JNK. Why are you buying Tesla bond? So fundamentals are horrible, but the market momentum is very high. So that's the difference in my opinion. You asked for it.
I'd also put less weight on their suppliers like Disney. That's going to be a blip. Their long-term direction is in-house production. That's where they're making their money, and they're getting their binge audience, and they're getting exclusive rights. So their whole House of Cards and Orange is the New Black, that's the trend they're going for. They're trying to be the new HBO, not just the next new movie provider. So I think long-term, they're fine. You're right. The fundamentals are different from a brick and mortar or from even a hardware maker. So there's an elevated kind of momentum by there, is what you're saying. That's my 2 cents.
Okay, is that it for you?
Yeah.
Dave, you're next.
Pass.
Okay. Then the gentleman in the baseball cap there.
So I, just like the other gentleman mentioned about Kramer talking about Visa, MasterCard, and American Express, I'm going to put orders for Visa at 95. So buying Visa at 95, buying MasterCard at 124.
V, first V, and then the
Visa, the credit card.
Just V?
Yeah.
Visa.
Here's a Victor.
Yeah, that's one of those
Visa,
few
okay.
single character ones.
So you're buying a 95.
So I want to buy Visa at 95.
That's kind of it's kind of dividend to some extent.
So the way would do this is you sell a put, the 95, collect premium. If it doesn't come to that point, you've collected that premium.
Right. Yeah. So that's why I was asking about the
Assignment fee.
The assignment fee. Because I want to buy Visa at 95, MasterCard at 124, and American Express at 75. And the reasoning behind this, as he mentioned, was what he mentioned. And then millennials as a whole are using their phones, and you can see it everywhere, to do a lot of shopping. It's hard to separate them from their phone. And a lot of the transactions are happening over online. At some point, I imagine Bitcoin might be able to take some market from the Visas and MasterCards. But for the most part, right now, you have to have a credit card in order to buy anything online. And so, because retail stores are losing more and more customers as more people are buying online, I see Visa and MasterCard continuing to grow, MasterCard and American Express.
By the way, MasterCard's in me, I know.
And with the coming, I think there's coming volatility, so I think there's going to be a good time to start buying into these.
0.69. I think they have pretty parallel tracks. I mean, you see the charts seem to be pretty similar. I don't know which one you might prefer. Or, I don't know.
I'm buying all three. There's no ETF for them.
Well, make up your own, I guess.
So I'm going to create my own. The other thing I did this week was I sold. One of the second highest position I had was Wells Fargo, with the new issues coming out with than repossessing cars and
That's Wells
just
Fargo
more and
WFC.
more controversy. I sold
Yeah.
Wells Fargo on Monday.
You know, that's a little beefier dividend here, 3%. That's other.
Yeah, I sold
MasterCard,
half
Visa,
of my position, and
1%.
if it continues to go down, then I'll go back in. But for now, I think there's more downside to this one, and I just want to lower my entry point at this point.
Why do you think the value's not already priced in?
Well, because there isn't a class action lawsuit yet. Right now, it's just a story that they've taken people's cars, and I'm sure there's something else that's going to come out. I want to see what the class action lawsuit is going to be and how much. As soon as that comes out, I'm sure it's going to take another dive. But if you talk about maybe 1 million people whose cars were affected by this, Wells Fargo is so huge that any payment would be, it would be 0.00 of a.
They've been surviving a lot of bad news. I own it.
Oh, I see what you mean. I mean, Vince would say it's a support.
It's at a support level right now.
Yep.
Why sell a stock when it's at a support level?
Because if it breaches it, it's gonna fall hard. No.
What I was saying is that because we're coming with we're having more volatility in August and September. I think I can lower my I can dollar cost average at a lower rate, at a lower price. Right now I have one entry at 47, which is the one I have still on. The other one, the one that I sold, I had an entry point at 53.
Wells Fargo is generally regarded as the premier company in its industry.
Right.
Not after last year, though.
But it's been having
with the black eye from last year, don't you think?
Yeah, they got a black eye from last year, but it stopped going down.
Okay.
Right. Yeah. I'm not exiting the Wells Fargo completely. I just exited.
How long have you been holding Wells Fargo?
So Wells Fargo, I've had the position that I exited had about a year and a half.
You gotta pay long-term capital gains.
Yeah, exactly. The one that the part that I kept is a short term, so that one I'm not selling that one yet. But I'm looking at entry again, but at a lower price, and I believe it's going to go down. I see September as another volatile period. Korea is a concern, but I think a bigger concern is the budget that's coming up with the government, and I think that's going to, they're talking about shutdowns and all this, and I think that's going to create more volatility in a period where that's normal.
When's the next interest rate talk? Is it coming up, right? End of this month?
I don't know, but they're saying when Yellen testified, she said maybe only one more in December. So I don't see that as a giant concern.
Okay, is that it for you?
Yeah.
Next gentleman there, next to you.
Nothing to agree.
Can you pass? Then
Yeah, I have two company. One is PayPal, PYPL.
PYPL.
So it has like little up and then a little down. So I think, in my opinion, it will.
And it also has no dividend.
No, they acquired a company a couple of years back, Zoom, which is kind of a good platform to send money across different country, and I think it has a good buy point. That's my opinion, that it may go a little up because of the international transaction kicking in. You can send basically to anybody without using much bank or like American Express traveler's card or something directly to the recipient. That's the technology that Zoom provide, which PayPal using now. So another is called Square. It's SQ. So if you go to any kind of fast food chain, they are taking money in that SQ Square. It's a young company, but I like their technology that they have now, that app
no yield
that you can show it to Starbucks or any fancy store, you don't have to even use your credit card. That Square is introduced. That's why that stock gained in 1 year. Like it will go further, I guess. That's
Gary,
my
you know,
opinion.
many people know here is Jerry Dorsey created that company along with Twitter. The Twitter guy who started this company.
Yeah. Oh, Dorsey? Yeah, I guess that was the guy. People go Google that.
That's a good company there.
Dorsey.
I thought they had the little square on top of
Yeah,
the credit
now-
card that you swiped on.
That's one thing, but now they come up with the phone app. So you don't have to even, so suppose you are going in a taxi, the taxi guy will just put in the phone and then take the money. So you don't have to give cash or credit card or anything.
Let's say it charges your credit card.
Yes,
Right.
which you registered in the.
It's not a cryptocurrency.
No. It's think about that American Express, Visa, and whatever they are doing. It is like kind of using that to a phone, so that you can pay the money without. Because what happened to me in the past, I gave my card to a restaurant in DC. I don't know what they did. They created an American Express card with my name, and it's not internet buy. They are using for at least 4 or 5 days till I get a call from Amex, which they already taken $1,000, $200, $300. It's like buying grocery and gas and all these things. It's like a physical card of my American Express with another person. Because you give a restaurant, you go and give a credit card, right?
Mm-hmm.
So then they take it for a few minutes and they sign up. During that time, they have this now some sort of copy machine or something. They take it, and there I did a Google search. It happened to like thousands of people. You don't check your website every day, and they buy like $50, $20. I had an alert for $250 and above, so I didn't get anything. But the other credit card company also use that as a surveillance. If they charge heavily, then they stop it, which is good thing. So it won't cost a lot of money. But due to this kind of application, you basically don't use your card, like especially in a restaurant or something. You just, like Starbucks accepts that I know of. So hopefully, as he said, millennials are more into.
What's the advantage to the person who's paying?
The advantage is that you are not using your credit card all the time, and then they send you an email.
But you're saying there's sort of a virtual copy of it.
Yes.
So, what's the advantage? I mean, it seems like
The advantage is that, like the example I gave, like somebody from the most of the spending happened in Arlington and Alexandria of my card. Physically, it's within my possession, but somehow that copied and used as a physical card in gas stations and grocery stores and all these things.
Wait, but how does that compare? Because I went to the supermarket and now they have Apple Pay and Android Pay, so and it seems like those are the giants in the industry. So what's the advantage to it?
No, the same thing, like the Android Pay, Apple Pay, think about he's one of the competitors. Yes.
You talk about not actually having to pull your card out so somebody can take it and copy it. Now it's just the phone, so you don't see my card, you just see the phone.
Yeah,
That's
but
what he's
what's
saying.
the difference with this and like the Apple Pay?
Well, it's the same. It's the same.
Same thing.
It's the same. He's
Same
just saying
thing,
instead
but
of giving your card, you're using
The
the Apple
point is
Pay.
that a lot of more,
more secure, that's
places
all.
Yeah.
people are using, so they come up with this little chip, which you might have seen that they put on a phone top and swipe, right? That was the Square. Now they come little advanced.
You can also do your coupons that way. So like
Yes.
people are going to McDonald's and
Yep.
instead of ordering their food, they're looking it up and pulling
Uh-huh.
up a coupon. They didn't order their fries.
Yeah.
So what do you think will allow this company to compete with like a giant like?
Means they are not a competition. That's why the possibilities they will grow in price. So they don't have a competition.
But Apple
Makes
Pay's a
sense?
competition. No.
No, because you know the Apple Pay and the Android Pay you are using for your own purpose. This is for the cab drivers.
No, but in the supermarkets they have Apple Pay now.
Yeah,
You put your
they
phone
have.
in,
Yeah,
right?
that's
So-
true. Yeah, but in that segment, like if you read a little bit more on the Square, like what they are doing, it won't be like a next Apple or Google or something, but it has some niche individual. That's my opinion. I guess.
Right,
Yeah.
and that's what we want. So what do you think? I mean, we don't know what you're not.
Yeah.
That's what you think.
So PayPal's coming up with the Venmo for like international
Uh-huh.
money transfer as
Yeah.
well. Wow.
Yeah, no, they have already. That's the.
They do already?
Yeah, I sent
What's the
them-
name of it?
It's called XOOM Zoom.
Oh, okay.
Yeah, because it's free.
Zoom
That's
does
why
that.
the PayPal I said will grow a little bit because all the other companies they charge a fee, whereas PayPal come up with for free. I don't know how they do that, but I have been using.
Zoom is free?
Yeah.
I didn't think it was free.
It is free now. Yeah.
It's not free.
It's not free?
No, it used to charge, but after PayPal purchased, Zoom is free.
Since when?
I sent to my parents and all it's free. Trust me.
Since when?
Maybe last October, September, October time frame.
Did you just send something?
It's been taking like $2.99 every time I send them.
Seriously?
Yeah.
Because I sent
Almost
several.
Almost free.
Almost.
Well, no, but don't
Cheaper
they?
than anything else that I don't.
No, they might have like you read there little bit. They might have like if you send $500 and below, and you have like some like they put me that like if you put a debit card in that their account something like that it's free.
Okay.
Trust me, I sent like even last month also I sent it's free.
A hidden charge could be the currency conversion. I don't know. When the currency is converted, I'm sure there's some type of spread there, right?
Yes.
Yeah, that is.
But anyway,
I mean,
it's taking
I'm sure
longer
there's-
time, please. Go
Okay,
ahead.
so
Sorry.
that's it. Our next other lady here.
Can I pass? Because I can talk. I have been interested in investment for a long time, but been missing the score. So I want to job to learn more and get started at least. Yeah. Thank you.
That's great. Okay, so that's it for you.
That's it for me.
Next lady next to you.
I'll pass.
Oh, okay. All right. So now another lady here, Kate. Yeah.
Well, actually, this week was a slow week. I didn't do any investing per se, so I guess I'm gonna pass. Although I'm a little bit anxious about just the drops that I've seen just in this past week, but
You ain't seen nothing.
I know.
Yet.
I know. That's what. Yeah.
You're anxious about that.
Yeah. Well, that's
Then you
why.
might go on cash.
Mhm. Right.
Just get on the claps.
Right. So that's it then for you, Kate?
That's it.
Paul, you're next.
I actually didn't do any trading this week. No trading.
All right. I think Dan, you're
Other than buying some index, haven't done anything. Just BTI, fixed, fixes the Vanguard International. Watching Intel. I'd like to get and I'm thinking about, you were talking about Wells Fargo. I don't know, I'm on the, I was thinking about dumping it too and buying HSBC. If you want to take a look at that, if you want to keep in the same sector.
I was actually, I'm gonna go back into Wells Fargo. I just wanted to drop further.
All right, that's it.
okay. Well, let's open it up for now. We got.
What about you?
And I will say I thought, for one thing, I will say, I know people are bored by closed-end funds, but, that's my specialty, so if you're asking me, I stick with closed-end funds, but the premier, in my opinion, the premier sponsor of closed-end funds is an outfit called PIMCO, PIMCO. And they have a lot of people are selling the PIMCO shares this week as a fear and all that. So a lot of them dropped a lot. But that was kind of an opportunity because their underlying portfolios didn't drop that much. But the sentiment about them did decay because they had gained so much. So I did buy some, I bought some, there were only one of the PIMCOs that is at a discount right now. Is PCI, PIMCO Credit, and I want to buy that. So you had dropped because I'm very concerned, and it closed up. I got some about 21.75, 21.79. I had an order in for months, and it went off. Surprisingly. The thing is, this chart misleads because the yield is so rich. 10% yield, like That's what.
Where does that yield come from?
You know, they do a lot of trading with their swaps. They swap. I mean, they're like it's like a hedge fund, but they operate like kind of like a hedge fund. They're out in the West Coast. Bill Gross started up the shop. Well, they kicked him out, or he quit because his ego was too much for him. And the remaining guys out there are sort of hedge fund players. He brought in a lot of talented people.
So this is a closed-end fund?
That's from their trading and interest from the bonds that they hold. So BCI is the only one of them that is at a discount. All the others are premiums.
Do you know of an equivalent ETF on this?
What was that?
Do you know of an equivalent ETF on this?
ETF or?
That you can participate in other than the closed-end fund route?
Yeah, PIMCO is they actually, I think there's some kind of a hedge fund ETF. I don't know what that is, and I don't think that's a good idea, frankly. Because PIMCO, the folks, they put their money in their own portfolios in their own. You go buy the hedge fund ETF. Does anybody know what there is some sort of hedge fund ETF out there?
I'm sure there is.
But I don't know what it is.
Transaction costs involved with that as well.
Right. And the thing with the PIMCO folks, they're putting their money into it too. So that's what you got going for them. But they got such huge premiums. And this one was at a discount because it was, I guess this is the last one that they launched. And they weren't really big. It was over $1 billion they had in it, and it was just too much for the market. And so decided to have had a discount on them. They're creeping up nearly to even the underlying portfolio. This was a reaction, and if the market is beginning to go up, that was a good entry point. Unfortunately, it's rebounding here right at the top. It's 22.31, so your gap was kind of limited. But volume, volume was popped a lot. That's a huge volume on this thing.
Is that a monthly distribution that you got that?
Yep, it's a monthly
dividend. Yeah.
It looks like the volume is dropping as the price goes up each step.
Right. I mean, and you're absolutely right. People in it, they don't want to sell it, but people buying it are afraid to buy because the discount on us kept shrinking.
Yeah.
So that kind of discourages a lot of buyers. But people had this profits in there, and then this scare came out, and of course they wanted to sell out, and so did offer an opportunity at the time. But that that's all I know. That's what I think.
Yeah.
That's not I mean it's true. But I will say, I think the consensus opinion is that the PIMCO sponsors are probably the best in the closed-end fund.
Can you hit a longer term chart on there?
What?
Pull up a like 5 or 10 year.
How much is the discount, Gary?
Now it's like 2%, very small. And maybe not even that, I think that for one day down there closed at a 5% discount. And that was great. That was at 21.70 or something like that. Back at, and these closed-end funds, they just don't move that much. They
over
just
about
don't.
$21, your volume's dropping off as the price is going up. So that's
And
probably
they're
a
slow.
number to keep on.
They're really slow movers. But you're getting it, they say with closed-end funds, you get your paycheck in the mail. That's what you're getting. You're getting that. You're not getting a lot of action, all that. You're getting a lot of cash through the dividends.
It can be nice to get some big dividend checks because when you invest on the long side, you're out your money and you're suffering. Whereas the guy that shorts the stock you invest in, he gets rewarded for attacking your stock.
Well, I mean,
he gets the money while he's waiting, while you're without your money while you're waiting.
Well, somebody who shorts, they have to pay
interest.
Pay any dividends or whatnot, and plus, so a guy that shorts you got to be really confident because you're paying out.
Yeah, that's one of the advantages of getting something with a higher dividend. It helps keep the shorts away, unless they're really serious about it. And in
Yeah,
that case,
because the
you
shorts just
might
don't
wanna
like
take a
paying that
closer
out,
look.
yeah. So,
Yeah,
but I
this
mean,
one,
the closed-end funds, they don't swing that much, they just don't.
Yeah.
And,
Gary,
so
same
if you
thing
look
happened.
ration, you look elsewhere.
Same
It
thing
looks
happened to, sorry, go ahead.
No,
I was
go
gonna
ahead.
say, same thing happened to GDV. What's your opinion of GDV? GDV. It's also a closed-end fund. Can you compare that GDV?
It's different, I mean,
It's the same thing happened to that.
Been up 30%.
It was a dip in there. I wonder if something happened. Yeah, see the same thing? I own GDV.
Yeah.
GDV, okay.
Yeah, my question to you was,
Oh,
what do you think is the
1.4%
reason why they
yield, huh?
both dipped at the same time, just about the same amount?
Yeah, oh, and I will also add that too. And I think it's maybe a fair characterization. A lot of these closed-end funds, you know, they have premiums and discounts on them. That is kind of a function of the volatility. A lot of experienced people on there think that a lot of it's kind of a function of the volatility in the market. The market last week was pretty volatile, and that jumped up. When volatility jumps up, then the discounts widen out and premiums shrink, just because that drives the sentiment on closed-end funds. The feeling of volatility. And I think that might have been why GDV dropped. You know, like Himco too. Big drop. I mean, that was $1 share drop.
Right.
Yeah.
I picked up some, I owned it for a long time, but I was comparing that to PCI that you have, and I wonder, they're both big firms, one pays less than the other, but I wanted to see what your opinion was of these two big monsters that pay very well.
Yeah, and I mean, also, right off of the gratuitous observation, that Gabelli's groups are not so well thought of. Gabelli,
You're
I think he's a billionaire. I mean, where did that money come from?
Yeah.
I don't know, I mean.
Bill Gross is a
he's
billionaire,
not
where does
well
that money
thought
come
of
from?
as, yeah, Gross made a bunch too, you're right.
They both have the same character.
Do you know the expense ratio on these closed-end funds?
Yeah, I don't even know. I don't, that's not something I'm
Yeah.
concerned about.
Well, you should be, because it comes out of your pocket. You make
Well,
10%, but minus your expense, right?
I mean, if you're going for expense ratios, I mean, I guess we're getting right down to the wire, so any other thing?
I do.
Yeah, go ahead.
I think you had mentioned, Dan had mentioned Intel. I think Intel, if I'm correct, I read they bought Mobileye.
Yeah, sure.
And I just bought a brand new Ford, and I have to say, I do think Mobileye is a whole lot ahead of the Ford technology and the self-driving cars.
They also are, they're partnering with Toyota now in Mobileye, so that they're getting into the
I just think Mobileye is a lot better than a lot of the other technologies. Although it was a technology.
The thing is with Intel, I mean, it's just such a big company, so watched that news is always priced in, like, you know, so.
Yeah, we talked about it in this group a few months ago when Mobileye was acquired. You know, what you normally see is acquisition means an expense by Intel to buy that. So you'll see that reflected in the next quarter. So the stock went down some months ago. But that then the Mobileye acquisition manifests itself, the benefits of it manifests maybe 9 months, 12 months out. And you're seeing that a little bit now.
Because I just think with the the driving technology, self-driving cars, Mobileye seems to be, I think, leading the pack, or maybe close to it, I don't know.
Yeah, it's been a good movement last week.
Okay, well, go ahead.
One question. I don't understand. What is it that causes, like the PIMCO you showed before,
Right.
for them to give such high dividends? Well, what is the incentive?
You know, the PIMCO people are kind of a hedge fund type of operation. And what they will do, and they scour the bonds for getting the best deal for their portfolios. And, you know, that they're doing this, I mean, they're only doing 3 or 4%, but they're able to trading. They have a research department that's, has been over the years. Now things have changed, but they seem to get the better deals, the ones that others don't really understand. They'll buy and get, a richer yield, and then borrow. We have a lot of, spreading, they're swapping shares out, Fannie Mae's, and, all kinds of stuff.
What's
I
the
don't
incentive for them
understand.
to keep it high when there's other stocks in the same price with
That's
lower
what
dividends?
attracts the investors. It's a different, it's a portfolio that they.
But it's not a stock.
There are people that are looking for dividend
I
alone.
mean, it's like,
And
you
so
get your money
by
from
getting
in the
them high.
mailbox. That's what you're getting that kind of, great stock move. It's not gonna move a lot. It's just, you're gonna get that money.